afternoon. How are we all doing? I haven't got my chat up. Hang on a minute. I'm not organised today. Let me just get chat working. There we are. Afternoon, Danny. So I can't organise windows or anything today. It's one of those days today. Must be the weather. It's the first rain we've had in the UK for about a month. So sending everybody a bit mad. Afternoon, Danny, FTNet. Van Thang, I can't say your name, sorry. Wozjek, Ro, Fletch, Marco, Paul, Virginia, how are we all doing? So market's just opened. We're off and running. Where's my pen? There it is. Afternoon, Moomo. So yeah, market's open. Breaking to the upside on the open quite substantially at the moment. So we should get some decent trades in today. Not a bad day yesterday, not a good day yesterday. Ended up $200 up, $250 up. Bit of a whipsaw day yesterday. It was kind of up and down, up and down, up and down. This morning was very mediocre. We had a really decent break today. The DAX broke nice and cleanly up into kind of yesterday's close, basically. It came straight off yesterday's close and tanked. So short triggered, dropped, and then it came out and stopped out, and then we flopped around up here. So now it looks like we're running the highs again. So DAX, this is all-time highs we're going for today. But total rotation during the London session, all-time highs is target. FTSE, very much the same. Very big range at the open. We had a pullback, just got in, but stopped straight out. And then obviously we've pushed back up again. So not a lot you could do with it this morning. It's just dead, just sideways. So looks like they're trying to break through though. So we might get a breakout on that. But I'm out of both of those. So $1,000 down on the morning, which is not the end of the world. So hopefully we'll get some decent breaks this afternoon. So S&P500 range is in. 5-minute range is good. 5-minute range is also good on the NASDAQ. I'd imagine the Dow, yeah. So 5-minute range breaks on all of them today. So we'll see where we go. Looks like we're trying to break long. So obviously with everything at the minute, index-wise, pushing hard. But as I covered this morning in the members stream, if you're in the members stream, this area that we're in on these US indices at the moment is prime pullback territory for bear market. So obviously we've had the first leg. If we are going into a bear market, this is where the second leg is going to start. And there's obviously, if we're going to go bear, we're going to break that low. So this is the turning point today, potentially. If the market this week breaks Monday's low and closes below Monday's low, we've got a down week, which means potentially confirmation of the start of the bear market. So obviously we've pushed down first leg, pulled back up in the retracement. It's going to start with an indecision candle followed by a bear move. There's your 3-bar reversal. So we're at the pinnacle basically of what potentially could be the high of the pullback for the next bear leg down. So we will see whether the market has faith in what Trump's doing now. Don't know whether businesses have got faith, whether businesses can pull back the tariff deficits that have been caused in the business, whether the tariffs are going to go up again and it's going to cause more mayhem. We don't know. But a lot of people are calling for this to be a bear move. So we will see. So this, if this is going to be a bear move, this is today, tomorrow is where we should see it start to roll over. So we will see. If we break out into new highs, potentially we could just be putting in a V-shaped recovery. Yeah. And then from there, we'll pull back and go long. So we will see. But critical point we're at the minute. Dow certainly doesn't want to go high today, does it? So just about to trigger on a short. Just quickly looking at the news today. We haven't got any news today. We've had CPI for the pound this morning, which came out way higher than anticipated. If you look at the pound moves today, though, not particularly bullish, is it? I said in the live room this morning, this was your bull move on the news. It went straight into the previous monthly and rejected. We got a lovely reversal alert going, which we've pulled back and looks like we're in a retest at the moment. So CPI numbers being higher typically will be bullish, because that means that we've got to increase interest rates to keep on top of CPI, which means that basically higher interest rates attracts more income and currencies strengthen. So however, this CPI number is an annual number. And I think with what's going on with the trade at the moment, I'm not sure the market's really going to pay as much attention to that as they should do usually. So I kind of said this morning, I'm not really too worried about it, because it's probably not going to rally off the back of it. And it doesn't seem to be at the moment, but obviously we'll have to wait for the day to play out. But as you can see, market reaction is not strong on the pound at the moment. So yeah, that news doing absolutely nothing. That's all we got news-wise today. We've got the ECB Financial Stability Review, which is Lagarde and that say a lot more than comes out of that document. So I wouldn't worry about that. Shouldn't really get any movement off of it. But it's it's already happened anyway, isn't it? It's 9 o'clock in the morning. So yeah, we've had it. The rest of the news this week is PMIs tomorrow, and then we've got retail sales for the CAD and the pound on Friday. So nothing else to worry about news-wise today. So we've got no catalysts today to drive this in any direction from a news perspective, not forecast anyway. This morning, if you look through the news, interest rate to prevent inflation from falling under 2% may have to come below the neutral rate between 1 and... This is way into the future. There was nothing basically this morning. The upshot is of any interest. If you can see, like, there's the CPI, which is 7 o'clock this morning. We had nothing. Yeah, so there's nothing exciting happened at all today. So nothing from Trump, nothing about conflict, nothing financial. There's no planned news. So it's literally whether or not the market can be bothered to go today. Obviously, from the DAX and the FTSE's perspective, that was a no-no. So we'll see what happens. So 10-minute ranges are in. 10-minute range is an inside bar. So no directional bias on the FTSE, the S&P or the Dow. NASDAQ, long break. So long break triggered off the 10-minute range. So I am long NAS. So looking at where we're potentially going today, obviously all-time highs are on the cards. So this is this week's high so far, which is yesterday's high, basically. That will be our initial upside target today, if it is going to try for a long break. And obviously, if it's not going to try for a long break, the low of Monday, which is this week's low, will be your first targets. So we'll see if we get any attempts. I mean, they may not attempt to go anywhere ahead of PMI, but we'll see. Right, so there's your indices at the moment. We'll see where we go. Just the one on at the minute. FX-wise, I'm struggling to bank anything at the moment. This market is literally just doing that. So these trades that I've been in, you can see, I haven't banked for 3 days. This is the 4th day now, not banking, because everything that I'm in at the moment is literally just doing that. So I'm having lots of opportunities to bank stuff over and over and over again. I've had this Aussie New Zealand that I could have banked twice now. And every time it moves, I just haven't banked it, and it sits there. Same with the Euro Pound this morning. Had an opportunity to bank that today, and now it's pulling back. It's just flip-flopping. We have got some breakouts starting now, which is good. So hopefully they continue. If they mean revert, then obviously I have to get more on. But haven't managed to bank anything because we're just sideways everywhere. So if you look at the ADRs today, there are no ADRs. The only movement we've had this week is the US dollar Swiss. That is your only weekly range hit. And that was caused by this morning's move down into propulsion. So I said this morning in the live room, chances are if this pulls down into these weekly lows, I'll have a go at it. So I was waiting basically for an ADR hit today. We didn't get an ADR hit. So that's where I'm interested in longing it, and then second position at the monthly low. But again, didn't quite get there on that one. But I would rather look at taking Euro Swiss, which I'm already in, than US dollar Swiss. But that is the only thing that's set up at the moment for weekly ranges. There's no monthly range extensions at the moment. We're on the 21st of the month. We haven't actually got to any monthly average ranges. RSI dashboard had a lot lit up this morning. So there was a lot of RSI extensions this morning on the hourly. I think we had sort of 6 or 7, all extended to the upside, all have played out, but not really gone very far. So if you kind of look through the pairs, I don't know. Yeah, there was one there. So there's an RSI on the hourly there. In fact, you'll probably be able to tell by the 4 hours, because the 4 hours will still be extended. So euro pound, so that was an hourly RSI extension this morning, but I'm already long on that one. So I'm looking for the breakout, pullback, retests, and off up into there. Euro US dollar. Find it. That's a 4 hour RSI extension, and that was hourly RSI this morning. M pattern gone in on low time frame. Yeah, so just wait for a reversal alert, and that potentially could be your M pattern reversal for the day. US dollar Swiss, obviously we've already looked at that one. The reversal alert and the retest has already gone in. So there's your reversal alert, there's your retest out of propulsion. So that's a good looking long. Play it back up into 125 ADR. And US dollar yen. Again, nice W pattern. So that one's extended on the 4 hour to the downside. So again, market structure is looking pretty good on that. This is the deepest pullback we've had. Went straight through propulsion yesterday. You've got backups coming at weekly levels there, but that's a nice 61.8 retracement leg, looking for a push back up to double top in propulsion. So that looks like a fairly good long. But yeah, there was a load of RSIs on the hourly as well this morning, but obviously they've all kind of started to play out because we're just starting to reverse back up now. Okay, NASDAQ break is good. S&P also long. So targets upside, NASDAQ, happy with that. In fact, actually, I might move it down a little bit. So just give it a little bit of breathing room up there, but we might fly today. ADR is all the way up there. So we've got loads and loads and loads of upside room out of the highs from the week. So if it is going to run for the highs, give it some breathing room. S&P, fine. So that's the high. That's your Globex high today. That's the breakdown from Globex. That propulsion gap. So target on a rejection of propulsion. In fact, I might move that down ever so slightly as well, because it's got to close above there to close the order. So I want it to close in that propulsion gap if it's going to reject it. That is assuming we're going to break long. Dow is inside bar still. So no trade on the Dow yet. See where we go. Afternoon, Mark, Ryan, Robert. I'm in US dollar Swiss. Do you think I should break even or get out due to US dollar potential bear move happening? So US dollar Swiss. Difficult. No, I don't. The Swiss franc, I suspect, is going to drop interest rates. So June the 19th is the next interest rate release for the Swissy, which is 3.5 weeks, about 4 weeks away, isn't it, basically? So you're not going to get any news until 4 weeks on that Swiss franc. So there's plenty of time. I reckon they're going to drop to zero. We're on 0.25. I think they're going to go zero. They could even go negative because their inflation went down to zero, which they weren't expecting. So the Swiss franc should be weak which means obviously US dollar Swiss will take advantage of that. It is bullish at the moment. So you've got market structure to the upside. This is your higher low going in right now. However, obviously, as we know, the world doesn't like the dollar at the minute. So until these trade tariffs are rectified, I don't know what the dollar is going to do. And I don't think the market really knows what to do with the dollar. You've still got to use the dollar. Everything is traded in the dollar. Oil's traded in the dollar. The stocks are traded in the dollar. The dollar is still going to be very, very used. But as for strength of the dollar economically, sticking 10% on top of your bottom line invoices, ask any business, it's not going to help because your customers are going to go, I can get it cheaper elsewhere. So I don't know. I don't think anybody does at the minute. You can only go with what you can see, and what you can see is bullish market structure. You're coming out of an RSI extension to the downside as well at the moment, so it looks good for longs. I really think we will at least come and test this propulsion gap here. So this breakdown that we had, yeah, that was Trump's tariffs there. Okay, I think we are probably going to get back here, but I don't know. We should be able to test last week's high again and see if we can form at least a range and hold. So I don't see any reason we shouldn't get bullish price action unless tomorrow's PMI numbers all come out as negative. There's no Swiss PMI. So your Euro PMI will affect the Swiss franc, but all depends what happens with these PMI numbers tomorrow and how the market reacts to them, more importantly. Because we don't know what the market's going to do and how it's going to react to the PMIs. So difficult, but I'm happy. I would be happy taking a long on that where it is now. Just had a reversal alert on the 15 and a beautiful retest out of propulsion. Look. Higher highs gone in, higher lows gone in. Market structures textbook. Look. But then you'll have a load of other people saying, whoa, what a beautiful flag break. I can't wait for that to break short. It's either going to go up or it's going to go down or it's going to sit there and go sideways. I don't know. One of them is going to happen. I can guarantee that. Might take a punt on the US 500 short. Yeah, we were talking about this in the live room this morning. In fact, I didn't rename that, did I? That's just reminded me. Let me just do this while I remember. Otherwise, I'm not going to remember. Just so I remember what the stream's about. Yeah. I said this morning, for me personally, I am utterly useless at long-term holds. If I would need to set up an account where I would basically hit the sell button here, place a stop loss there at 50% risk, and not look at it. Because you could quadruple your account easily on this move. If this is a bear market that we're going to go into, you need to sell it and you need to not look at it for 6 months. Obviously, look at it every now and again just to make sure it's on its way. But when we get down here somewhere, stick maybe a break even on it. But yeah, it's that type of trade. It's not the sort of trade that I take. I don't do this long-term hold. This is a 3 to 6 month hold. If you look at the last bear market, and how long we lasted, it's a long time. Yeah, this is leg one. Got a long way to go if we are going into a bear market. But I don't know if I just this is the biggest move we've had. Yeah, if we measured this morning. I don't know. We measured it the other day. Go back and look at COVID. COVID was 12,000 move. This is 13.5. Yeah. COVID is the largest black swan bear move we've ever had. Trump just did a bigger one. But look what happened after COVID. Yeah. But after COVID, we had a plan. We knew what we were doing. 2 months into COVID, it was very clear what the path for the world was going to be. No one's got a clue what we're going to do next. There is no trade agreements in place with anybody. He's gone, this is what I'm doing. I'll give you 90 days. Otherwise, I'm doing this. So what he's basically done is given the world 90 days to go off and form relationships elsewhere and turn around in 90 days and go, thank you very much for your business. We've moved. Yeah. How is that going to help US business? Not. Yeah. He's expecting all businesses everywhere to flood into the US. And a lot of them have said, yes, we will do this. Yes, we will do that. When the accountants get hold of the plans to move NVIDIA chip manufacturing into the US, and they realize that NVIDIA chips are going to go up by 60% because of the cost of manufacture, NVIDIA is going to turn around and go, do we want to remain the world leader, or should we just throw the business away because Trump's in charge? What do you think the business owners of NVIDIA are going to do? Yeah. They will do something to placate him, but I don't think he's quite seeing the big picture, what he's doing here. So I don't know. But this is, as I said, I've been watching a lot of stuff about this on Bloomberg, watching some analysts, some very seasoned professionals in the industry, what they think this move is. And there's a lot of them think this is the start of the end for US stocks. I can't believe it myself. I don't think it is. But, I don't think it's that quite doom and gloom. They're not. That's a bit of an over-exaggeration. But, it's not the start of a flourishing Make America Great Again, put it that way. It's kind of the opposite. But you can always undo stuff, can't you? But I've used the analogy of running a business before. If you run a business, you've got 500 customers, which you've built up over 10 years, and you suddenly turn around to your customers and tell them you hate them all, and you're putting all their costs up by 25% because you can't be bothered to deal with them because you don't think they've treated you nicely. When they emailed you, they didn't say thank you. Yeah. Do you think they're going to stay with you, or do you think they're going to go, idiot, and go somewhere else? Yeah. That is in effect what he just did. He sent an email to everybody on the planet saying, I don't like you anymore because you've been unfair to me, my country, my business over the last few years, and now I'm going to screw you all. We've got other suppliers out there. So I don't know. But that's the consensus on Wall Street. Some of the consensus, it's, as with everything, there's always two opinions. This is why we have a market. There's some buyers, there's some sellers. Who's got the more? We don't know. We'll find out, won't we? But at the moment, today, good. We will see. Our evening outro, just noticed the yellow star. Ooh, look at you with your yellow star. We like it. The more people that got yellow stars, the better. I'm long, but not sure how greedy I should be. Yeah. So if you're long, when I'm position trading, and I think all traders should have this mindset really. But when I'm position trading, I'm a worst case scenario position trader, basically. So if I'm long here, so let's say I bought it here and I bought it here and I'm long here. My target is there. Yeah. Some people will target that. Some people will target that. Well, that's what I'm targeting. Sorry. So some people like me will target that. Some people will target that. Others will go, I reckon we're going all-time high because America's going to be great again. For me, I'd rather take the money than gloat about, look at the size of my move. Yeah. Because those people tend to have more of that, which drives you nuts. I'd rather be in and out and done. So an ADR of movement from your average price is a pretty good target. If that lines up perfectly with some kind of propulsion gap or weekly, monthly high, even better, because we know there's limit orders at weekly, monthly highs. We know there's sellers in propulsion gaps. So if you're long, look for where the market's going. If you are averaged here, when you get to there, you've got a choice. You can either break even your position and hope it doesn't stop you out before long, or if it's going to drop and you were right to break even, well done. or what? You know, it's entirely up to you. Yeah. So just look for where the market's gone. This is why we use the propulsion gap indicator, because it tells us where the market's going. Came from there, went back to there. Came from there, came back to there. Came from here, here, and here, and here. Going back to here, here, maybe here. But this move is not normal price action. This move is Trump. Rather, this move is Trump. Yeah. So best case scenario, as a pessimist about the US dollar being strong, I wouldn't go much higher than that. Safety, there. And if it pushes down and you need another, and you need another, that is your target. Yeah. So as you average in, you move your target to the next level. We're always making sure, well, I'm always making sure that I've got an out. My out is never going to be where it originally was. If my plan is buy it here and get to there, and it goes down to here, I'm going to buy it, average, and get out there. I'm not going to keep that target in place. I'm not going to go for that one. I'm going to go for the closest one, because that makes me money. That means I can free up my capital and reallocate it to something else that looks good, because this trade didn't work out. It will make me a profit, but it wasn't the original plan. So just with anything US dollar at the moment, just don't get greedy, because you've seen what he's capable of. And if you haven't traded through a Trump presidency, if you started trading in the last 4 years, you've never traded through Trump, this is what it's like. The market doesn't move on fundamentals anymore. It moves on the voice of the orange man. So if the orange man says that, you go that way. If the orange man says that, you go that way. But unfortunately, you don't know which way the orange man is going until he opens his mouth. And then the market goes panic, 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 and then it decides. By then, it's too late. So in, out, fast. If you haven't got any risk on when he opens his mouth, that is the best position to be in. And if you want to be safe, scrap the US dollar altogether. Try not to trade it. But unfortunately, it's kind of crossed with everything. So you can't. Pull back inside range on the Dow. This looks a very whippy one today. Let's see if we can flag and break. That's a very big pullback on the Dow. It is still an inside bar though, so we haven't broken new lows. We are still inside bar. We've got a lower low and a lower high on the FTSE. S&P, got the FTSE in my brain today. And the NASDAQ, same, lower low, lower high. So bears are stepping in at the minute. Those highs, so that's everybody selling those highs. See if they've got the strength. Could turn into a whippy today. It's like financial juice, but you can choose what's in there. Pass. What's like financial juice, but you can choose what's in there? You haven't said what you're talking about, Outro. In the POSI A, using the mean reversion strategy, is the add entries comes from what I set in the distance between trades? In the POSI A, using the mean reversion strategy, is the add entries comes from what I set in the distance between trades as ADR. So the way that the scaling works, additional trade entry settings, is you can use a lot multiplier and then the distance between trades as a percentage of ADR. Yeah. Makes sense? So basically that is, so you're saying this is the distance in ADR I want as a minimum between my trades. So if you shorted it there and that is 75% of ADR and you get your next signal here, it will take a trade. If it pushes up to there and gives you a signal to short, it's not above that line, therefore it will not take a trade. Yeah, so that is your percentage. 75% of the average daily range is what I use. So first entry, much easier to show you on an instrument I've got multiple trades on, wouldn't it? Aussie, New Zealand. Yeah, so I'm shorting this. So there's an entry, there's an entry, there's an entry, and there's an entry. ADR on this is 51. So distance between that and that is 41. Distance between that and that is 47. Distance between that and that is 59. So as long as it's 3/4 of an ADR. I have it's right above. No. I'll read out what you've typed so far today, Outro. I'll show you what you've typed today, Outro. Good evening. Just noticed the yellow star now. It's like financial juice, but you can choose what's in there. I don't know what you're talking about. That's bizarre. You've obviously typed something that's not allowed because it hasn't come through in my chat. Using ADR or RSI is the same. No, you can't use eight. Go and watch the video, Marco. So there's an ADR reversal strategy and there's an RSI mean reversion strategy. Yeah, these are your initial entries. So the first entry is either taken on an ADR extension. So if price pushes down and goes beyond ADR, it will take a trade. Yeah. Or if you're using the RSI entry, if it pushes down below RSI and gives you a signal, it will take an entry. From that moment on, all additional entries long will be taken at a minimum of X ADR that you set. And you can set whether or not price has to close beyond that level. So where I am selling here, you can't see it. Yeah, there is my next short. Okay. That is my last entry. Yeah, the distance between those two is 39 pips, which is 75% of ADR. ADR is 51. So the distance between that and that is 75% of ADR. So when this is now, I'm selling on this. If price moves up from here, it has to be above that line and give me a signal to short for me to enter. RSI has got nothing to do with it. RSI is your initial trigger. Your distance spacing is based on ADR always. Does not take extra trades on RSI. So basically, if let's say, for example, this thing screams up to here now, yeah, and gets extended on RSI, it's not going to take another short here. I'm already short from here. It won't take another short here. It's got to be an ADR away, and it doesn't matter if RSI is extended. Yeah, I can't wait for RSI to get extended. You can get conditions in the market where it will push and squeeze in one direction for ages, right? So from here, yeah. So let's say, for example, you're using ADR 80. From here all the way to here, right? It never got extended above the 80 level. So if you shorted it there, let's say, for example, because it was on an RSI extension and it sat around and reset RSI, and you said, I want to get in on the next RSI extension, you're still in it from here and it hasn't given you another entry. You've got to scale in to the move, because what we're doing is we're saying, looks like there's a potential that this could pop because RSI's got extended. If it does, brilliant. If it doesn't, we scale in and we wait for them to not only correct that leg, but whatever leg they put in, we collect the money on the entire leg they put in. So, it's better to have 2 to 3 to 4 positions on, or trades on in a position, than it is to have singles. Singles just make you 0.25% profit. Well, me, because I'm using 0.25% risk. If you've got 4 trades on and it moves 1 ADR beyond your average price, you're going to make way more than 0.25%. So that's the idea. We're scaling into a leg, and I'd rather it didn't just go straight in, straight out. Don't forget, I'm not looking for a strike rate. I'm not looking to be right. What I'm looking for is the market to have pushed hard in one direction and then take a trade. Yeah. I don't care whether that trade works or not. It's irrelevant. What I know is the market needs a correction at some point. And if it's not now and it's in 3 weeks' time, brilliant, because the further that gets stretched, the faster that pingback's going to be and the more powerful it will be, because the market always corrects by 30 to 50% of its previous move. So if I get in there and I'm wrong, no problem. I'll just keep getting in until I'm right. And I will be right, because that's all the market ever does, isn't it? This is why position trading works so well, as long as you don't over leverage. That's bizarre. I've put in Discord what I can see. Right. Look. Good evening. Just noticed the yellow star. There's nothing above there. You haven't said anything above there. You sent me a screenshot of saying something, but it didn't. No one else saw it. I don't know. I've no idea. For those of you that want to know, this is what Callum said. Sorry, I shouldn't say your name, should I? Your name is Outro. Discord. So that's what was said. Also, I know we were talking about news feeds last week. You should check out PIQ Suite. You can arrange columns from various topics or news outlets, Reuters, FX, etc. PIQ. Pepperstone. Get started for free. Pricing. Reuters feed, unlimited articles, news feeds 10, PIQ lists, TV players, charts, data, reduced ads. So it's ad driven. Okay. Keyword highlights. I'll have a look. Launch the suite. You're going to ask me to sign up, aren't you? No. I'll do that another time. I'll have a look. Never heard of this, so I don't know if it's new or whether it's... But I mean, to be honest, I don't really... I don't react to news. I want to know why the market just moved, because it doesn't matter what comes into your news feed. It doesn't help me personally in a decision-making process. So if something comes out in the news feed, by the time I've looked at the chart, it's already happened. So I just want to know from the news feed why something's moved and whether or not I should now have a bias on it. So this does exactly that. Yeah. So there are signs that the US could be interested in a deal with the EU. Bullish US. EU prepares a trade proposal for the US to steer momentum into talks. Yeah, so it's all going slightly bullish for the dollar. So should I be... It's not actually going bearish for the dollar. Well, or rather, the market's not reacting. Yeah, so there's no reaction to that. But I can't make a decision on that news to do anything. So I don't know. I'll have a look at it. If it's pretty, I like pretty stuff. So if it's pretty, I might use it. But I mean, this... I certainly wouldn't pay for it. How much was it? I didn't see what it's 30 quid a month. High IQ. Depends how many news feeds you need, I guess. I don't need charts and data. I'm not interested in that. I think it's just one of these things, it's just another one of these things that, yeah, it looks good. But will you actually use it? There you go. There's that spike. So that's the spike from the news we've just had with the EU, I guess. So it's when things like that happen, I want to go, oh, why did that happen? Oh, EU's preparing, Market's bullish on the back of that. Doesn't help me, does it? It's rumour at the minute. David, thank you very much for the $10. I missed you there. Good day, Lee the Great. Thank you very much, David. Much appreciated. We'll go to my beer fund for the weekend, for the rainy weekend we're having in the UK. Bank holiday, of course it's going to rain. We haven't had rain for 6 weeks, 8 weeks. Bank holiday, torrential. My son said to me yesterday, actually, because he was off college yesterday, he said, "Oh, it's a lovely day for paddleboarding." So I looked out the window and was like, "Yep, this is the last day of summer." So yeah, anyway, didn't go paddleboarding. Gutted. Didn't get my partial on it, unfortunately. I'm really thinking about putting a new trigger in the EA for not having to close above, but for hitting it. But then that's really going to annoy me because it's going to hit it, close above it, and I could have got that price and I took that price. And then it carries on. Yeah. But hey. So we'll see where the market goes from here. But the market is bullish off the back of that news. So we might get a continuation on that. So far, the Dow's rejecting highs. Just that little high from the pre-market there. But we are still bullish. So just pulling back on that news at the minute. Do with a nice little rally. If anybody's got any pairs they want to look at, let me know. Thank you very much, David. I shall... the cost of beer in the UK now, I shall put that in my beer fund because I need multiples to actually pay for a beer now. What's the dollar exchange rate at the moment? That's pretty much a pint of beer in the UK. Isn't that bad? I used to go out with £10 when I was younger and stay out all night clubbing on 10 quid. Right? Now I go out and every time I go to the bar, they take 20 quid off me because I have to buy myself a drink, my wife a drink, probably the kids a drink. Yeah. So if I go out and have 4 rounds in a pub, I've dumped 100 quid. It's sad, isn't it? Just saddest thing about inflation. Beer price goes up. I'm your biggest American fan. Thank you very much, David. I know you are. I like that a lot. Afternoon watch check. So yeah, any pairs you want to look at, let me know, especially David, obviously. David gets preferential treatment. If you want preferential treatment as well, keep hitting the sub button. So let's hope that we're going to get a continuation long on this. So we've got bearish price action just gone in across the board on all the indices at the moment. So hoping that we hold. We've got propulsion gap here. Stop loss is kicked in on the NASDAQ. So NASDAQ, I can't lose on. That just covers, I've got a slightly tighter stop loss running on the NASDAQ. So the reason for that is because I've got risk running on the NASDAQ and the S&P. I've got a 20% ADR trailer on the NASDAQ, and on the S&P, I've also got a 20. Was it maybe the Dow that I had a bigger one on? But basically, just to make sure that we just protect that risk a little bit because they're very in sync at the moment. So if we do drop from here, NASDAQ will just stop out with no loss. And obviously, there's potential for loss on the S&P. But I think there's a chance that we could pull back deeply today and retest that. But let's hope we just get a clean break and go. That'd be nice. US dollar CAD, I'm looking at an ADR exit at the moment. Sure, are you? I presume. That doesn't really help me. I don't know where your average price is or your price is. So an ADR. Oh, yeah, you're looking for an ADR today. Yeah, so that's a good exit point today. So that's that triple top high. So we hit that area, which is a previous propulsion gap, retested it, sold it again, retested it, sold it again. Then we broke through. So that caused the propulsion move here. So this entire area of which you are testing right now, yeah, is a propulsion move. So anywhere in there, potentially we could see buyers entering the market. So just be a little careful of that. Just bear that in mind. Also, bear in mind a 50%. A lot of the times, propulsion gaps get filled 50%, and then it bounces. It's not all the time, but sometimes you find it will just test 50% of it because then the buying pressure gets too far and it pops. But yeah, ADR today is that high. That is your last high before the break. So that's a good target to the downside. It's going to need the dollar to drop, though. They don't seem to be liking that news, do they? On the actual dollar. Although it's not, it's not actually not really a big move, is it, at all? Look at the US dollar yen. It's not going anywhere. 3-bar reversal out of propulsion on the that's a really nice looking short. Look at that. So we've got that propulsion move, part of that reversal alert this morning. Yeah, we came up, retested, sold it. So there's your retest. Came up, retested again with a 3-bar reversal. So when that candle closes in 11 minutes, obviously if this closes bear, that's a textbook 3-bar reversal, double top propulsion gap rejection. Basically a double M pattern. And I'm short on it, so it'd be lovely if it does. But we'll see. I've got a long way to go. I'm 150 ADR on this now as an average. It's just been sitting around for weeks, well, days, basically. In fact, I think it is. It was my first entry, so first, second. There. So, yeah, it's only a week old, week and a half old. Correction on that. I'm going to start taking partials on that. If it rejects this high and pulls back, I'm going to take a partial off at ADR at my average to get out some of it. Kind of happy I did not get onto any with my ADR 10 settings. Flat day today, also okay. Yeah. So ADR 10 hasn't triggered any, is it? Still on ADR 3 at the moment. We are very choppy at the minute. Very hit and miss. Struggling. A lot of wicks at the moment on the indices, but it does get going. I mean, this is the thing at the minute I'm sort of seeing with this is that we do get going. When you get going, you get going. When you don't get going, you can kind of tell. It just struggles, but it grinds. So partials are getting filled, but no bigger moves than that because it's just not got the momentum, or it's got the momentum and you just don't look back. Doesn't seem to be any nice kind of real sort of, there's intraday trends, multiple days, but actual daily trends from the open, we don't seem to be getting many really nice trends at the moment. It's either parabolic or it's just like wishy-washy, isn't it? Indecision, this is the thing. This is what indecision is. It's rotation. Rotational markets are created by indecision and balance. So if there's balance and we're happy to trade at an area, we get indecision. There's no real reason to go outside of these areas to trade. If you can fill all orders within this zone, you'll do it because your job is to get your orders filled. If there isn't any, you need to find liquidity, and liquidity will be sitting outside of those areas. That causes trends. It's not getting at the moment because the market doesn't know what to do, does it? We need Trump to sort of say, this is what I'm going to do, and this is certain. Is that ever going to happen? Probably not. Out of my NASDAQ, looking for a short break. Hopefully you don't get it, because I want it to go long. I've been working on my, I covered it in the live room this morning for the members, but I've been working on a mean reversion version of ORB for the indices, and it gathers statistical data. And I came across something interesting today while I was doing some testing, which made me build another EA, which took me off track of what I was doing. But I built another EA, which I'm just finishing off before I came onto stream. But I was looking at a rejection strategy to deal with these markets this exact market that we've got at the moment. Yeah, so when we're getting this type of day, which we do get quite a lot of at the moment, I'm looking at a strategy which deals with these days. So what it does is when it breaks above the initial ranges, we're looking basically for a pullback inside the range, and we short that rather than so confirmed break back inside. So what you're doing is when you break out, you are either retesting and continuing, or you're rejecting. Yeah, this is what breakouts are. We know breakouts happen, and most breakouts fail. Yeah, breakout trading has got a 30-40% strike rate because most breakouts fail. So when you take these breakouts, you're going to get a high failure rate on them. So it makes sense if we are going to get that. So I'm looking at different signal patterns when we come back inside to see if there's any edge in taking false breakouts off of various ranges, 30, 15, whatever, hourly. But and that would work very nicely with ORB. So on days like this, yeah, you would go long and you would take a break back in short and then target somewhere within the range in case we go like this. Yeah. So on this day, you'd have shorted that, made money. And then as it broke out of here, you'd have longed it as it came back in, depending on how the signal works, for a profit like that. So when you get stopped out on ORB, mean reversion range retests, if you like, would profit you. On days where you go parabolic, what you're going to do is you're not going to get a signal. Yeah. So when we get the parabolic breaks, which we love and easily make money on, it's never going to signal because it never comes back inside this range. Yeah. If it's going to trend, which I'm going to struggle to find a trend today at the moment because we're not getting too many of them. But if it's going to trend in an organized fashion, as we normally like to see with market structure, you're going to break out long, you're going to attempt to short, you're going to stop out on your short, and your long will play out. Yeah. So as long as you've got a positive R on both strategies, the mean of the strategies will be profit. Yeah. So it's just adding an additional safety net for the days where we sit around and go like this. So this morning, for example, yeah, that's a good example of that type of day. So the days where you have these, they will be smaller because you will have taken mean reversions as well. Yeah. So they will cancel out some of this loss. The downside is on some days where you do this, what it's going to do is it's going to potentially take losses where you didn't need to on your breakouts. So it could hinder those trades. So, but again, it's all in development at the moment. This is coming crashing back down again. Come on, we're in greed. Should be bull market. This is the other thing that's really kind of not so much confirming, but making me more skeptical about going back into a bull market and getting this V-shaped recovery is, thanks for the follow, whoever that was. I didn't see who it was. I heard it. I didn't see it. Prince Douglas, welcome aboard. Thanks for subscribing. So yeah, this other thing that's concerning me at the moment is when we're up here, we're in a bull market. Yeah, the market goes long. Yeah, when we're greedy, there's risk on appetite makes stock market rally. We're not getting that, are we? We've been in greed for days and days and days, and we are nudging new highs in a very, very difficult fashion, not making high after high after high and like pulling back deep and pushing hard. It's the market's kind of sticking in this sort of greed. And when you get, this is a bit like divergence. When you get a strong greed market with a market that sort of stagnates and starts to potentially show signs of rollover, that's kind of like divergence. The same way as if you had an RSI going like that and you had price going like that, divergence. So it's an indication of we're not actually getting what we should be getting in this sort of situation. So it's interesting. I think it might, oh no, it didn't stop out in the NAS. Yeah, it's a bit tricky. Dow is coming down very hard, a lot harder than the others at the minute. So we've got almost got stopped out on that. We really can't make a high on this Dow. It's really dragging the rest of the market down at the minute. Tech stocks holding up well though. ADR 10 did not trigger anything today. No. It's a shame. Switch to ADR 3. But I'll be saying, I wish I hadn't traded ADR 3 today when I get stopped out on all three of these and end up with a $2.5 grand loss. Dow Jones is going to stop out, pretty sure. A lot of bears coming in at the minute. Doesn't seem to be a lot of fight back. So market structure at the moment, the last sort of 20 minutes is very bearish. Got a 3-bar reversal just gone in there. We've pushed back, couldn't break highs. We've just made a new lower low. So definitely starting to turn to the downside. But we need these buyers on the break today to sit and add. So hoping for an iceberg order on the S&P. Nasdaq's still holding up nicely at the moment. So we've just gone into accumulation on that. That could easily pop. Dow really struggling. Feels heavy. The market just feels heavy at the minute. It's like you just can't get the momentum. You know, this is a bull market. Greed. Stopped out on the Dow. Doesn't feel very greedy to me. That is going to be an absolute pig of a stop out. I can guarantee you in 10 minutes time we'll be back above the break. Out of the Dow. Too many wicks for me on US dollar CAD. I'm out with 0.2%. Good job. Money, money, money. Wish I could get to 22% on something at the minute. Yeah, good decision. So that's coming out of propulsion. Look, so this is the buyers that made that move start adding back in. Yeah, so that's your propulsion break. Yeah, that's where they finished the order. We pulled back. And then they added more. Potentially, obviously, that is an indecision candle. Spinning top is an indecision candle. Followed at the moment, you've got 30 minutes left on this candle, yeah? So you're taking a decision mid-candle. Mind you, it depends what time frame you're looking at. But obviously on the hourly, this is not closed. So, you know, if this closes as a spinning top as well, that is indecision. So it means the bulls and the bears are in equilibrium. Bulls and the bears are in equilibrium. The last batch of sellers were pretty strong. So it means the bulls are trying to buy it and they can't. It could just roll over very, very quickly. So we're reselling that area at the minute, but we can't break. Yeah, so your battleground is drawn between here and basically here at the moment. So I've got 0.25% I could take on the pound, euro pound. I've got 0.25% I can take on the Aussie New Zealand at the moment, so I can bank 0.5%. Really tempting. I just really love this propulsion, this propulsion gap from yesterday when the interest rate decision came out. I love the way they sold it, and I love the way that it's rejected today. So we've got obviously that low from yesterday at the moment. If we can break yesterday's low, you're going to find a load of sellers jump on board this. But the trouble is we're flying straight into last week's low, which has probably got some limit orders at it. But that's really where we should get to. If we break yesterday's low, I reckon we'll probably flush down to there by the end of the week. So I'm kind of wanting to hold it at the minute, but it's really hard, having not banked for the last 4 days, to sit on stuff when it's just going sideways. Difficult. These wicks, there's so many sellers today. Market's just not got any. That's it. It's just not got enough oomph, is it, today? We need some news. Come on, Trump, where are you? Crude oil inventories 1.3, forecast negative 1.1. So we have some movement on crude, I should imagine. Yeah, big sell-off. There's your gap fill done. If you were playing the gap today. Quite sure why that gapped up, but we did. Gap fill from last week, which got completed on Monday. Your reversal and your retest. It's going to be one of those days today. Too many wicks, yeah. Stupid question, maybe in your variation tests, how much better was the partial close on bar close instead of hit of level? I don't know. I have never tested it. It doesn't do that. It's the partial close is basically candle close above. I've never tested it on hit. That's the equivalent of using. I mean, you might as well just use a TP if you want to do that, which is no problem. So you could just stick TP on it, but I've never tested it, so it's worth a test. It might be more profitable, so I might code that in and add a test of the level rather than a close above. If it's got an advantage, but I mean, the thing is, it's always going to have an advantage. With every strategy, I can always find settings that make it preferential to do one thing. When you've got so many inputs and so many variations, I'll always find something that works better when it hits that level. There'll be a setting somewhere, but that's curve fitting. So if I introduce that as an option, redo all my previous tests, and it works out that makes more money by hitting it than closing above it, then there is an advantage. But if I do all the previous tests and that makes virtually no difference, let's say it makes a standard deviation of like plus 1% and minus 1% from the previous results, inclusive, isn't it? So if the NASDAQ makes 1% more, the S&P makes 1% less, the Dow makes 1.1% more, the DAX makes negative 0.6. Yeah, it's got to be something that I'm looking at it and it goes, wow, that makes a massive difference to the equity curve. If it doesn't do that, you're just going to curve fit it into making something that kind of works for you on historical data, but it doesn't mean it's the best thing to do. So yeah, it's something that's worth testing, I think, because I've noticed it a few times where it's hit that. But then again, I've noticed a few times where it's hit that and I've taken it manually and then it goes off. And you know, it depends on the lot size as well. And this is the other thing. If you're using lot multiplication, if you, every time it hits that and wicks outside like this and you take that, you're on a standard entry lot, what you're going to find is it's not going to make a lot of difference. If when you are on an increased risk amount because you've had a losing streak, and it hits that or it closes above it, the difference between that and that, when you're got 1.3% risk on, for example, is going to be a substantial amount of money, which can make a massive difference. Because let's say, for example, Trump says something right now, yeah, and we get a massive spike up, like that sort of candle size from where we are here, for example, yeah, that's quite a lot of profit. So if you look at the P&L on this now, which is sitting, I don't know what it is. Oh, it's gonna stop out and guarantee it. But yeah, that's sitting at 287. So we're looking at a difference between a 50% increase in profits. Yeah. So where we are now from there to there is 250. The difference between taking that as it hits and taking that closed up there is going to be about $400 for me. It's a lot of money. Yeah. And you do get candles that close strong above a level, because I usually adjust the level to somewhere around about a high, which means that when it rejects that high, the second time it has a go at it, what happens is the guys that are selling here get overpowered and they flip long, which pushes it further. So you get a strong close above resistance. This is why we get propulsion gaps. Look, strong close above resistance, because what you're doing when you're coming up to limit orders is you're absorbing the limit orders. You're absorbing the limit orders. You're absorbing the limit orders. When you break through the limit orders, because there's no limit orders left, everybody that was short on these two flips the opposite direction. So you push through and you also get the combined power of the stop outs flipping, because the market participants are always in usually. The algorithms are always in. So they're not going, oh, I'm going to stop out and not take a trade. What they do is they flip and reverse, stop and reverse order. So you get a big push because you've got 3 times the momentum in this particular case, driving the market up. So if you put your partial closes at highs, you'll find that when you break highs, you get a strong push. Or you get a strong rejection because there's an iceberg order there that just absorbs the whole lot and pushes it straight back down again. In which case, that's the best exit to take. Every time you get to it, though, it's going to be different, isn't it? So which is the one to use, whether it touches it or whether it closes above it? Don't know. Tell you after the candles hit it. Yeah, so today I'm saying, oh, that would have been good. But what I'm going to say is in an hour and a half's time, when this goes like this and finally pops up there and closes up there, I'll be saying, that's why I don't take those. Don't know what it's going to do you? Every day is different. There's no right or wrong. There's just different. I just wish it would make its mind up. Either hit my target, close above it, and let me out of my misery, or stop me out. One or the other. DAX looks like an exhaustion move. DAX is a lot more extended than the US indices because it's made all-time highs. So we're out a lot further on the DAX. But yeah, ADR reversal today. Your reversal alert's all the way down there because you had nothing but bull action. But yeah, so watch this propulsion gap. Very strong move at the moment. We've got strong US movement coming in as well. Struggle. It's a real struggle at the minute. So this is an all-time high rejection, look, potentially. Or we're going to fly. There you go. So there's this candle here, look, prime example. Yeah. We hit the highs, rejected, hit it, rejected, hit it, rejected. There's a load of shorts here. Today, those shorts hit this level and they flip long. So we spike through with a very big candle. When you break a high, you normally break it with, and this is how you can tell whether a high or a low has got potential. If it's a big, strong close above there and you do not immediately pull straight back underneath that high, it means that there's a possibility that the momentum has shifted, which is what a breakout continuation is, which becomes a trend. So, 5-10 minutes or 2 or 3 candles after the breakout, if you're still sitting above that high, you're probably going to go. All-time highs are a little bit different because all-time highs are more difficult to judge because you just don't know where it's going, do you? With all-time highs, this could now drive up to 150 ADR. Typically, you don't know when you make an all-time high. Yeah, you don't tend to go hugely above it. That was a gap up, so that was a little bit of a different scenario. But look at the break of the all-time high there. Yeah, it takes a lot to break a resistance. This is what support and resistance and supply and demand is all about. the reason it exists is because there are a large amount of market participants in one direction. This is why it stopped there, because the buyers came in and bought it. There weren't any sellers available to absorb the buy orders, so the buyers had to stop. Or there was a very large supply of sell orders up there, or demand, whichever way you want to look at it. And the buyers could not penetrate there because they absorbed every buy order that came, and then the buyers ran out of steam. One of those two things is what's happened, because there is only two things that happen in the market: buy and sell. The combination of the two creates price action. Candlesticks are a time price opportunity reflection of buying and selling orders, aren't they? That's all it is. We're looking at different time frames of orders. There's more orders in that one than there is in that one. There's more orders in that one than there is in that one. There's more orders, less orders in all of these than there are in all of these, because I'm going backwards. There you go. So 1 minute reversal alert is in. There's your breakout into all-time highs. That's where the flip is, if it's going to happen. But if it's a failed breakout, which most of them tend to be usually, you're going to come screaming back down below this low. This is the point, look. This is the buyers that broke out attempting to rebuy the market. There is either supply up here or there's not. If there's not, you don't have a choice. So you'll find somewhere around here a good area to look for longs if it breaks down. But hopefully, for me, they'll buy that up because I'm long on the US indices, and they'll do the same as the DAX. Doesn't look good though, does it? Right. I've got nothing else to discuss today. So I'm in those. I'll see where they go. At the minute, I'm not holding up much hope that we're going to break long today. So might get some stop outs today. It looks like it is going to stop out today. So might have a down day today. So I'll be looking to recoup that tomorrow. But if it does break out to the upside, we should get all that loss back and make a small profit on the day, which is what it's all about. So it's either recoup the losses, try and get as close to break even as we can, or run them and make all the big money. So at the minute, we are just very choppy for the day. So we'll see where we go. But I will update you on the mean reversion strategy when I've got something a bit more concrete on that. And I might have a go at testing this price touch feature rather than close above. So it's not actually too difficult an option to put into the EA, so I can just set an input for close above or not. That's a very easy test to do. So it's worth having a look at, I think, because days like this, obviously, we'd be out with 75% profit on the NASDAQ. But if this thing kicks off now and drives to the upside, I'll be cross about that. So horses for courses, as they say, innit? Right, I'll leave it there. Anything you need, let me know. I'll be back on Friday morning. So be aware tomorrow it's PMI day. All day PMIs, Euro, Pound, US, CAD. Sorry, not CAD. Euro, Pound, US. Then we've got the CAD retail on Friday. So tomorrow, obviously, we'll recap all of that stuff on Friday morning. We'll also have the retail sales, which will have kicked in on Friday as well. But any positions that I close out, I will update in Discord. But at the moment, I'm just struggling to get anything closed. So I'm toying with the idea of just taking some off because I can add it back on. Obviously, with this Aussie New Zealand as an example. Yeah, close it out here, take the profit. And then if it pushes back up again, I'll add it on again. At least then I'm banking and we're putting something in the bank. But, you know, while we're flip-flopping around like this, I'm just not banking. So I just kind of want to go banking. Go live tomorrow. I can't go live tomorrow because there's no point. There's no time I can go live tomorrow. And I've got stuff to do. If I go live every day, I won't get anything done. So I won't get that strategy development done. I won't change the position trader EA logic. I won't work on all the statistical stuff. I can't say it. Statistical data analysis that I was doing that I talked about in the live room. I won't do any of that because I won't have a clear day to do any work. This is work, trading, but statistical analysis is the real work because that's where the trading comes from. If I don't get that bit done because I'm sitting in a live room all day, I don't develop anything. So, got to have some downtime at some point. But we will hang out and have fun. I know. But I still got to get some work done. See, this is the thing. What I call work spreadsheet analysis, building EA and statistical models, backtesting and robustness testing. Most people call the job of trading sitting in front of charts and pressing buttons. Sitting in front of charts and pressing buttons, a monkey could do. My dog could do it. I could get my dog up on the keyboard right now and I could make 2 big buttons with buy and sell on it, and I could put treats on both of them and tell her to go for it. And whichever one she picks, she'll trade. That's not work, is it? Anyone can press buttons. Why you're pressing the buttons and what you're expecting to happen after the button presses and what happens after the button presses and what you do with that information, that's where you make the money. And that's where the majority of my time is. Sitting in here is just proving concept, isn't it? Yeah. But we know concept works because you can backtest it. Anyway, I've stopped justifying why I only do 3 days a week. And hope this breaks out to the upside. But, you know, DAX is starting to come down, so I'm not massively hopeful. The all-time high looks like it's failing. We have got the backup of the pre-market high, or rather the previous high of session. So that propulsion move above that high, there we go. That's a great example, isn't it? Bang, breakout. We actually broke out of there. So you got everyone that shorted it today flipping, and everybody that shorted it yesterday flipping. That creates a move which is way bigger than all the other moves we've had so far because you've got way more market participants in there. If that was the only thing they had, we're stuffed and they will come back down again. We'll see. Right, so yeah, I'll update you on that. Obviously, go on, NASDAQ. I'll update you on that tomorrow. On Friday as to what's happened, but I will post in the Discord group. If it's all nice and profitable today, I'll let you know what's going on with it. But and I'll be watching this to see whether or not I bank anything. Okay, long-winded exit, wasn't it? Right, I'll see you on Friday. If not, Discord or Telegram. Have a good day.